Today, Hurricane Laura makes landfall, pounding the Gulf Coast with wind, rain, and rising seawater, all in the middle of a pandemic. Plus, inside the historic solidarity in the world of sports, as NBA players protest the police shooting of Jacob Blake in Wisconsin. And finally, the TikTok drama won't stop. In with a new bidder and out with the CEO. We've got the latest. I'm Mackenzie Sigalos, and this is CNBC After Hours. Let's start with a look at Wall Street's day. Now, markets finished mixed. The Nasdaq Composite finished lower after hitting a record intraday high earlier in the day, while both the Dow and S&P 500 closed in the green, the S&P at an all-time high level. And take a look at shares of Microsoft and Walmart. Both finished higher after Walmart confirmed that it too was involved in talks to purchase TikTok. The retail giant said it would team up with Microsoft to bid for the app, which is currently owned by a Chinese company. Seem odd? Well, we thought so too. But Walmart says TikTok's integration of e-commerce and advertising is a, quote, clear benefit to creators and users in those markets. Now, the broader stock market rose after Jay Powell, the chair of the Federal Reserve, unveiled a major shift in its policy approach that could keep interest rates lower for a longer than expected period of time. The Fed will now let inflation run higher than its 2% target before raising interest rates. So what that means is that the central bank will let the economy run hotter than it usually allows before turning to an interest rate hike as a way to hit the economic brakes. Now, today's positive finish on the S&P 500 is its sixth in a row. At the same time, we learned this morning that another 1 million people filed for jobless benefits as the coronavirus pandemic's economic toll rises. This disconnect seems to perfectly demonstrate that old adage that the rich just get richer. But that's exactly the truth. It's been happening for a long time, but it's just much more visible in a time of crisis like this one. CNBC's Bob Pisani explains exactly how the rich are getting richer.
There really is some evidence that the rich are continuing to get richer. Now, we knew the rich were getting richer, but the gap is still getting even wider. So there was a report out by two Federal Reserve economists a little while ago that had pointed out that the rich own a lot of stock, which we all knew, but that these rising profits from U.S. corporations, and profits have been going up, combined with the declining influence of labor in the United States, is creating a much larger wealth gap. So there's some inequalities here. There's an income inequality that's been going on where the rich tend to get paid more, obviously, but there's also a wealth inequality in that household net worths of the rich are getting richer because of the diversity of assets they own, including stocks that keep going up. The wealthy are controlling more and more parts of the stock market. So right now, about 87% of the value of all the U.S. stock market is controlled by the top 10% of households by net worth. That number, 87, and it was even 88% at the end of 2019, that's the biggest it's ever been. 10% of the households in the United States control 88% of the value of the stock market. Now, because the stock market's been going up so much in the last decade, their net worth has been going up at the expense of essentially everybody else. There's also a very big difference in the assets that the wealthy own versus, say, the assets that the bottom 50% own. The very wealthy tend to have about a third of their assets are in the market, stocks and bonds. That's about a third of their net worth. But they also have a lot of net worth in other businesses or other kinds of investments that they might own. The top 20% of households in the United States own about 95% of all the value of stocks in the United States. If you look at, say, the bottom 50% of households in the United States, by far their most important asset is the home they own. The stock market wealth is very small for people in that bottom 50%, 2, 3, 4% of their net worth. Of course, this supports the idea that it's the wealthiest people that are benefiting from the stock market. Because the stock market has been doing really well in the last decade, the rich have been getting richer because the stock market holdings, the bond holdings, have been going up much faster than, for example, wage growth. So if you're just a laborer and all you have to sell is your labor, your wages have been stagnating essentially when adjusted for inflation, and you have less opportunity to have diverse investments like wealthier people do.
Okay, time for our sound check. Now, yesterday afternoon, the NBA's Milwaukee Bucks refused to take the court for its playoff game in protest of the police shooting of Jacob Blake in Kenosha, Wisconsin. Players from the Orlando Magic responded in solidarity, and the league postponed all 3 of yesterday's playoff games. After that, sports came to a halt, with teams from the WNBA, MLB, and MLS following suit. Now, it appears that the NBA will resume its playoff schedule this weekend, but yesterday's unprecedented decision by NBA players marks the intersection of one of the biggest national business and culture stories of our time as this country works to confront its issues with race and violence. Today, our soundcheck will highlight the insiders and stakeholders, from presidential advisors to team owners, who addressed this story on CNBC's airwaves.
There's always been this reticence by athletes to put their foot, toe, body in the water of political conversations. I think that has changed, and because of that, their voices are carrying a lot louder and a lot farther.
Along with the Bucks, we at the Kings have been working on these issues for a couple of years now, quite actively, and want to see change happen. And so the Bucks ownership and ownership around the league responded quickly last night, saying that we're broadly supportive of this movement and this understanding that things have to change and faster than they are right now.
I think that the NBA players are very fortunate that they have the financial position where they're able to take a night off from work without having to have the consequences to themselves financially. So they have that luxury, which is great.
But you also got to understand, in order for the money to be made, people have to be satisfied, okay? And right now you have the people in the NBA, the players, the product is not satisfied. And you're talking about a league that, remember, shares revenue. And the players are not feeling like their voices are heard enough on these particular issues. And I think they want more answers. You know, it's one thing to say how much money is going to be lost, but human lives are being lost. Black lives are being lost. And I think that's what the issue is with them.
We're partners in this, and if they choose not to play, that's their right, okay? And it hurts them financially, and it hurts us financially. I respect them. I stand by them. They're my partners.
ESPN reporting a few moments ago that the NBA players have decided to resume the playoffs. Today's games, ESPN says, will be postponed, but discussions underway on when those games will resume.
All right, Hurricane Laura made landfall on the U.S. Gulf Coast overnight, battering the southwestern Louisiana coast for hours with Category 4 levels of wind and rain before weakening and being downgraded to a Category 1. Now, natural disasters like this are always devastating, but Laura poses an extra challenge: the coronavirus. Big corporations like Home Depot and Lowe's that contribute to disaster responses had to make changes to their plans to comply with COVID-19 safety precautions. CNBC's Contessa Brewer can break down what those changes are and how we'll know if they've been successful.
We have looked at these big corporations trying to put into place emergency preparedness plans that now have to incorporate pandemic protections as well. So how do you socially distance people in evacuation shelters? And that's something the Red Cross has been dealing with. They had 5,000 people even the night before the storm hit. And many of those people are now being sent to hotel rooms instead of to maybe a school gymnasium that we've seen. And when they set up those shelters, they've got to have a massive space for far fewer people, as well as an isolation space if people come in and they're not feeling well or if they're exhibiting temperatures. Lowe's, for instance, has pre-positioned 2,400 semi-trucks with supplies they think they're going to need for recovery. They've pre-positioned those in areas that are in Laura's path. AT&T operates what's called FirstNet. This is a first responders only network. And what it does is it uses a completely different designated channel so that if there's damage to communications infrastructure, if there's power outages, if you have a lot of people trying to jam on very limited communications networks at the same time, first responders, police, firefighters, medical, can get on and have a dedicated channel. We know that Home Depot and Walmart are operating command centers remotely. So instead of going there and setting up in a command center and having people in and out, They are operating remotely and using their digital equipment. This is where that communications infrastructure really comes in important, and they're going to have to supply their own backup generators and the like. I think the first thing you're going to look for in how effective these plans are is, do you see a spike in coronavirus infections? Were you able to supply your people with enough masks and gloves and the proper PPE to keep them protected if they had to be on land? The second thing you're going to look for is, were you able to carry out disaster recovery and response in a way that was effective in spite of the incredible burden that coronavirus has put on individuals, families, companies, nonprofits, and governmental agencies? And that will be the really deciding factor in how effective this is. The third thing is, how fast are you able to adapt when you find these gaps? It's impossible to plan everything perfectly. And what's going to happen is the Red Cross, Home Depot, Lowe's, Walmart, McDonald's, these big corporations have to move nimbly and quickly to adapt to whatever challenges they find that they weren't able to plan for in advance.
Okay, time for today's numbers round. We'll kick it off with 3. Kevin Mayer has stepped down as CEO of TikTok after less than 3 months on the job. Mayer joined the app after a long career at Disney, where he was passed over for the CEO role. A source told CNBC that Mayer quit because he was excluded from talks to sell TikTok to a U.S. company, as mandated by the Trump administration under threat of a total ban in the country. Now, the timing of the resignation indicates that an announcement of a sale to a suitor like Microsoft, Walmart, or Oracle could happen within the coming days. Next is 5. The FDA has granted emergency authorization to a $5 rapid COVID-19 test from Abbott Labs. On a call with reporters, the company says its portable test is about the size of a credit card and requires no additional equipment. Our own Jim Cramer tweeted that this is the first large-scale test that can allow us to work and travel, and he called it the big one. Antigen tests can be conducted with a less invasive nasal swab than the traditional lab tests. They're also cheaper and faster. However, they're also more likely to fail to identify positive cases of COVID-19 than the lab-based diagnostic test. And finally, $200 billion. The world has its first $200 billion man. According to the Bloomberg Billionaires Index, Amazon boss and richest man on the planet, Jeff Bezos, saw his net worth surge above $202 billion, making him the first person to cross the $200 billion threshold. That's it for After Hours, but before we go, here's one more thing to keep an eye on. The Republican National Convention wraps up tonight with a speech from President Trump himself from the White House lawn. Get every update and development, along with expert analysis of the president's speech, by going to CNBC.com and downloading the CNBC app. We'll be right here in our home office every Tuesday, Thursday, and Friday with a new edition of After Hours, so be sure to catch us then.